Hello, everyone. Happy non-farm payroll Friday. How is everyone doing? Good morning, John. Good morning, McRangers. Good morning, Patrick. Good morning, Jacob. Good morning, Richard. Well, that's kiss the neckline goodbye. Happens a lot, Richard. And you get a woohoo out of that. Good morning, Royal Palms. Jake, oh boy, Jake. Jake just called the bottom on the correction, and so it begins. Watch for another massive volatility bounce now. Could you believe the end of July volatility from the window dressing and the Fed meeting, and then yesterday just complete reversal, you know. Also Intel, oh boy, you want to talk about ugly earnings and what, laying off 15,000 people? Oh boy. Oh boy, getting rid of the dividend. Sorry, still working on my coffee. Wife's out of town, back in Chicago. Uh, so it's been a busy morning. Besides non-farm payroll stuff, it's gotta walk all the doggies, gotta feed them, gotta do everything. No support structure. Uh, Hey, Martinez, yes, to hit the 21 EMA on the weekly. Well, we're going to test the volatile rotations. And this is going to be really interesting. This is a fun day, not because the market's like getting a white, but we're finally getting though a pullback, a decent pullback. Hey, get ready. The dip is near. Well, you missed it, Coco. Jake already said, and so it begins. So I already said he's calling the bottom. The dip is near. But is it going to go to new highs? I know you think it's going to go to new highs. This is interesting because I agree. We're going to dip. Definitely, we're going to dip. The market's already saying the Fed should now cut 50 basis points in September. I think before they did 50, they'd come out with an emergency cut. But then, geez, you just paused in July, and the market's already like, save us, we're falling off a cliff. Please save us, Mr. Fed. Oh boy. But that's the way it works. Have you found a good local coffee for beans with a roast date? No, I have not. No. No, not yet. Yeah, Intel was super ugly. But Coco, are we still going to 24K in the NASDAQ? Are we still? I'm honestly asking. Or is it only 22K now? All right, non-farm payrolls, big miss. Coming in 114. Unemployment rate, huge spike, 4.1, expected 4.3. The last months also were revised lower, like we've been seeing forever. This was not good. Average hourly earnings, 0.2 versus 0.3. So the earnings are down. Well, they're still up, but they are up less than expected. Oh, year over year, they're also down. Participation rate ticking up, so that means more people are getting back in the labor force, and earnings aren't keeping up with stuff. Hours, though, look at the average weekly hours ticking down. So not as much work out there. At least the government, we still got government payrolls coming in at 17K. We have factory orders coming out 30 minutes after the cash open, and then you got the rig counts. But that's where that sits. Look at this. Oh, it looks like it's almost July's over. We can't have Christmas in July, but because July's over. But look, we have a little green in here with defensive and healthcare. When you see defensive, consumer defensive and healthcare, that's generally a rotation into safety. Everything else is ugly. Apple's earnings report, I know they did a beat yesterday, but that was it. They are not strong underneath and do not justify like a 34 P to E. But so that's where we sit with that. What else? Groups is, let me do a refresh here. See, consumer defensive up 31 basis points. Utilities, another flight to safety. Healthcare only down 14 basis points. But look at consumer cyclical, technology, and comm services getting taken to the woodshed. Fed watch tool now 70% probability for a double cut in September. Whew. Boy, you want to talk about Trump for if they did a double cut in September right ahead of the election, because this is the last meeting before the election. Oh boy. Trump would go on a rampage against the Fed. Oh, you're trying to get Kamala elected, blah, 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 blah. You've been holding interest rates high, and now I'm running for president, and you're cutting 50 basis points. You're trying to tank me. Well, what would he call? What's the nickname he'd call for Jerome Powell then? Oh, boy. Clown show presidency all around. That's what we have. Clown shows. Look at this. That back down to 325 to 350 by next June. So this has like the economy literally unraveling. Fear and greed back solidly in fear mode. We're not to extreme fear. We could dip into extreme fear by going next week. At least the breadth has picked up a little. So you're getting the breadth has picked up. So it's you're getting more sell-offs across the whole thing. And look at the Schiller PE. Still up in nosebleed territory. We can bounce. This is going to be the secondary reaction, and then that's going to tell us that we're really going to start getting the big correction. The big correction. We had ExxonMobil, which was a beat. Chevron was a miss on EPS, but a beat on revenue. Chevron down. Intel, as I said, slashed their dividend, cutting 15,000 jobs. And I think their global workforce is 52,000. So they're cutting a huge chunk of it. Amazon, that was not viewed positively by the market either. So that's where we sit after the biggest summer week of earnings. The market's heading lower. Remember when we were going in July, the no-brainer trade, which I didn't bring up back when July closed, but the no-brainer trade was buy in July, 5%, easy peasy money. Here's your July, okay? Yeah, you had the little blip in the beginning, but this is your July. Was this easy peasy 5%? Told you, I went into bills. Went into short-term bills because it's not worth the risk right now. Yes, and we will get bounces. We will get bounces, and this is why please stick around, because we're going to then watch the secondary reaction. Because, yes, could we do this again? Look back in April. Nice 3-week decline, bottom of the rotation zone, marched higher. Could we do it? Yes, we are still in the rotation zone. Okay? The warning sign to me is we're triggering this wedge. So would I expect them to collapse? No. I'd be watching for the next rollover play. From a long-term basis, it's still in bullish mode on the weekly unless we close below the rotation zone, which would put us to neutral mode. But on the daily, remember, it shifted to bearish mode. We also triggered the head and shoulders, got the little volatility. Also at major market, we don't know if this is a turning point, but this could very well be a significant turning point. And one of the things, just write this down. Okay, because yes, the market after a pullback will find a bottom and we will recover. The market's not going to zero. However, you can go down a lot farther than you think. But one of the warning signs is you get volatility both ways. Both ways. You get an increase in volatility. Remember I talked about the VIX? Even with that pullback, the strong rally end of July, did the VIX drop? No. Then yesterday, here we go. Now, we're going to, this is not even a major spike. This gets to last October levels where we did find the bottom. So could we be looking at something next week, especially if we get Fed speak next week? Okay, yeah. Trying to calm down the market. But is this major high volatility top area? No. We could come down some more. So, Richard, you were completely correct. This is definitely kiss the neckline goodbye. Bounce up. It triggered the little mini patterns that only hit the first target. Then we got the reversal and the continued ride down. What am I really watching for going into next week? Even if we bounce today, what next week I'm watching for, in a bounce today, I would not, if we turned green, that would be mind-boggling. But you know what? I just took off the final target on here because my next real area, and I'll show you where I'm really focused on for next week, is going to be this 53.42, 53.50 area. Why am I so focused on that? You have the top area in March. You have the top area in May. Broke above it. Retested right at this base. This is a huge support area. It's also the 50% retracement. So this is a very key area. I would be shocked if we did not test it. Okay? Let's just see what's going on. See, it's already trying to snap back. Buy the dip. Buy the dip. In terms of your bigger picture, remember I said a couple weeks ago we could be down 2 to 3 weeks. We could still be down going into mid-August. We're getting into, we don't have, this is not a strong bottoming thing on a daily yet or anything else. We could be carving out a base next week against some very key support. And then the secondary reaction, that bounce back up is going to tell us so much. This is why I actually love the secondary bounces, because it helps you learn the overall strength and weakness. So from longer term positioning, the secondary bounce is going to help us. Unless you get a sudden event, you don't go straight down. Generally, anything can happen, but over history, over price action, we get the secondary reactions, and then we get to judge that, and it gives you some time to reposition. And this is not a market crash. Now, here's your NASDAQ. NASDAQ also coming up, kissing the horizontal neckline goodbye, finishing the targets. Pretty much right there. Okay? The next, and this is a major harmonic cluster. Remember, we have the 62.5 right here. That's going to be key on a closing basis. 18,561. Why? If we close below that, even after a bounce, I'm then really focused on reconnecting with the 200 daily, which we've not reconnected with technically since March of 23. We're also, remember as I went over that S&P chart, we're coming though into, come on, give me my line. Look, this is so classic. This is a really good example. So you had the base high back in March. Broke above it in May. Retested, tried to dip below, held it with the rotation zone. Fantastic buy signal. And then off to the races. Now remember, NASDAQ turned bearish on the daily. NASDAQ, unless we get a bounce back above roughly last week's low, could turn to neutral mode on the weekly, which means we still watch for some buy patterns. We definitely watch for rollover sell patterns because daily's in bearish mode. And from a target perspective, I am a lot more conservative because that secondary bounce could be short-lived. Okay, so we're in a very key target area to start looking for a bounce play going in next week. But that's a bounce. It has to do heavy lifting. And when I talk about the secondary reaction, at this point, any bullish setups have to follow through eventually with a close above the 62.5 harmonic. Because remember, the rollover zone is between the 50 and the 62 on a stronger bounce. So does it, again, if you're going to, all this is from my perspective. This is exactly how I set things up for myself. On any bounce plays, it's got to follow through with closes. I don't care about the market, whether it's the S&P, NASDAQ, Dow, Russell, whatever. It's got to eventually climb back above that 62.5 on a closing basis, on a daily closing basis, before I can really start focusing on, hey, we're going to retest that high area. So at this point, the NASDAQ, now if we make a new low today, this level is going to come down, but that's a close back above 20,055. That's a close back above major breakdown zone. So that's what I'm pointing out. In the S&P, that level would be back at 55.92. So just remember 5,600. That would be back to, it has to look through all the resistance it's got to get through now. Not saying it can't happen, but there's going to have to be some heavy market lifting to get into this area. So, yes, there will be bounce plays, but I'm going to set up realistic targets that eventually then it has to follow through with a close above 5,600, 55.92 before I can really focus on, hey, we're off to the races again. Especially since we haven't had a substantial pullback in a very long time. This is not a substantial pullback back in April. This was a 3-week pullback. So far, potentially we're in another 3-week pullback. This was a more substantial pullback. At least we had a multi-leg, an ABC correction. We did not have that here. So could we, this is even a more substantial pullback, but still ended up off to the races again. We had that great buy signal on the weekly, which is another thing, watch for weekly %B buy signals. This one would be tough. I'd start watching the single candle on the harmonics on a single candle above the 62.5. We'll go into that next week probably. That can be a front run. But I would again, the markets don't care what I would prefer. However, because we're also potentially triggering a rising wedge pattern, which could easily, after a bounce, take us back to this 5,000 level, which again would shock people. What do you mean 5,000? That's what? Is that a 10% pullback? Even that? That's not even a 20% pullback. So, these are things I'm keeping an eye on because weekly cycle's still heading lower. Let me see comments. Sorry, I went sort of off the rails there. For my intraday trading, I've had to go to daily chart levels. Never good for the bulls. Whether it's this kind of volatility or not, I always keep the daily levels in mind, period, as I've told you before, because there's the stronger levels. Now we're getting there with the increased volatility. But always learn to read the daily levels. Well, the IS on Monday moved the markets drastically. It depends on how big the variation from consensus is, Martinez. Coco, were you trading back during the last after the .com or after 2008 with a more significant correction in either of them? Because there will be buys, as I said. If there's multi legs down, you have to know where your levels are. because it's not just buy and well, you didn't go to new highs. Then you take the next dip, you buy. I mean, most people, this is where this is dangerous advice once you get to a more significant topping area. Because, yes, there will be key location buys, just like there was a very key location buy last October. However, buying every dip, just tell people to blindly buy every dip is dangerous for a lot of people. All right, this is interesting on the Dow weekly. The Dow got in a double top territory and has now confirmed it, bouncing off the 50-day. That's why we use the 50-day exponential. So it's confirmed. Look at this double top right here. It's confirmed it against the weekly rotation zone, but it has confirmed it. So I'm paying real close attention to the Dow, but I'd be watching for a bounce first. And it's not triggered it yet, by the way. But that could see the eventual Dow return to this 38.5 area and potentially to the 200, which the Dow hasn't been back to the 200 since last November. Russell. By the way, this is a really not so great double top. I have the levels on there because I wanted to see how they play out and where the target would give us. And if you take a look here, let me do a couple things here to clean up the chart. If you look here, just the final target on this double and the 62.5 are virtually that same place. So that's what I wanted to see. So could we still see some more rollover into a key support area? Yes, we've already hit the second target. And this is between the 50 and the 62.5. So that's where that sits. We already looked at the VIX. The DAXY was looking top heavy yesterday, and then we just went. As I said, it was looking top heavy. And it's already, I'm expecting the DAX to retest. If you're not already in it to the short side, I'm expecting it to retest Friday's lows. So at this point, Friday's lows. Friday, April 19th's lows and the 200. Then I'll be watching for the secondary reaction back up on the DAX. Okay, we broke the key best fit line, closing below it yesterday, just above the 62.5, but then the rollover falling out of bed. Here we finished the 87.5 yesterday, and it was broken out. That's fascinating right now. Because, and I know that we got the request for the TLTs. Because look at this, a key support area is right back here with the rising rotation zone. And the 10-2, and look at the yield. Kaboom. Remember, we closed below 62.5. I'm shocked how fast we got here, but we got to that 87.5 to the 100 area. So this is retesting the lows yields from last December, which held. So, going to be paying very close attention. Would I be going, we could be carving out at least a yield bottom in the short term, but now any bounce will definitely be looking for the rollover. The 10-2s. Here you go. Here you go. We got our first warning sign back in mid-July. Remember when we talked about this breaking above here and retesting? Then it formed a higher base and poof. What's the high so far? I mean, this is, yeah, we're right back at that 0 mark. This is the highest it's been since back in July of 22 when it inverted. And remember, this triggered but never invalidated the double. It just took a very long time. A very long time. So, and once I said, 0's the warning sign, but once this really starts climbing, especially above about 20 basis points, watch out. That's why we could get, hey, a bounce. We could even get a full more pullback, a little more pullback, a bounce. But then if we roll over and this starts going above 20 basis points, really watch out below for a significant multi-leg pullback. We're not there yet. Dollar index, little bounce on the ugly double, did not get to first target, and now we've rolled over. We'll probably complete these even on bounce plays. I'm now focused on return to 101. Return to 101 in the dollar index. Crude got the little bounce into the rotation zone, rotation back down. So at this point, sorry, this is going to go into the open, guys. If you need to jump, guys and gals, if you need to jump. 74 was the key target area. We're almost there. If we really start taking below here, we could easily test this 70 level or below, but we're going into a very key support area. Gold, still long term. Breakout higher with a little volatility, shakeout in the short term, but long term now. We're going to be starting to close in on a very toppy potential area in gold. So the long term might go into some profit taking / more aggressively raising up the stops. Just an FYI from my perspective. So, what else? Oh, yen. Here we go. Because they raised their interest rates. Going to be watching for this to go 144.58 is my next target area. Even on bounces, going to be watching for this of the retrace from January's lows to the highs. The highs in July. Going to be watching for at least the 50% retrace of this. If we get below 140.25, we'll probably then reconnect with the 200. So there'll be trading opportunities in this now for yen strengthening. Bitcoin still holding up relatively well. There's just not any fantastic patterns in here right now. We do TLT. TLT looks like it's definitely closing above the 62.5 today. So magnet price 98.88. So that's your next level. Key support now. Key support, even on a pullback, is back at 95. Which I don't even think it'll pull back that far, but that would be key support. The spiders hit the first, second, and almost third target. Look at that 62.5. That's 62.5. It stalled out right there, and the big reversal yesterday. Really watch where the spiders close in relation to 535.91, please. That's going to be key. But now you have the overhead resistance of the 50 exponential and all the breakdown base. So this is going to have to do some severely heavy lifting also on the secondary reaction to get back into bull mode. The Qs, Only could hit the first target. And clean up this chart. It's back between the 50 and the 62.5. Remember, right at that 62.5 is a key support area. If it closes below 446.99, though, I will get even looking more aggressively on the short side on bounces. It's already, we got the first cross the rotation zone. Remember, we don't trade it. Well, I don't trade it. It's to keep me on the correct side of the markets. And we'll probably be in neutral mode. That does not mean we can't get bounces. Again, as I said, targets have to be more conservative on the bounce plays. Thoughts on, I think we'll carve out possibly a yield base, maybe next week, get a little bounce. But the market's really starting to get aggressive, easing yield. I don't think that's going to change in the longer term. So I will be watching for rollover plays in the yields. You're welcome, Richard. All right, what else do we have? Let's take a look now. Oh, Tesla, still 205. Really, then if Tesla kisses 188 away, in which it should, these valuations are still ridiculously unjustified, but I'm expecting this to eventually break down. But it's Tesla. Still got to manage that one closely. NVIDIA, trying to hold on to the lows of Tuesday. But overall, we still have, remember, well, one of the key magnets is this gap from May earnings. So I'm still expecting this double, even on bounce plays. I mean, we had that ridiculous bounce and then already wiped out. Look at the volatility of this in market cap. This is throwing around market cap like there's no tomorrow. This is throwing around like 350 billion. Up, back down, and up in 2 days, 350 billion increase in market cap. This is where the valuations just don't make sense unless Nvidia is going to sell chips to everybody. Let's just take a look at this. Let me see where the tick opened today. Pretty minus 1200. So again, I'll be watching for potential rollover plays unless it can really sustain something above about 54. It has to really sustain a move about 54.15 before I could get into more bullish mode. So we have the other numbers coming out. We have the factory orders, which if those are ugly can just be more potentially prompting selling. We asked about, somebody asked about, sorry, I forgot who asked about the ISM numbers. Again, you have the ISM on Monday. So if this comes in ugly, like where you're getting consistent readings well below 50, it might trigger one key push lower, which then we could start setting up a bounce bottom pattern. Because next week is relatively light in major economic reports. Let's take a look at the heat map. Apple trying to do the heavy lifting. That earnings report, the services is the only thing that's growing from Apple's perspective. But boy, I don't know how people from a fundamental standpoint are justifying a PE of close to 35. But Apple, the key breakdown, I mean, you could easily see this back to 200 without batting an eye if the markets really start rolling over. With that, I think I'll wrap it up for today. Market trying to carve out a little bottom here, but nothing long-term solid right now. I'd just be careful today until after. Watch the next 20 minutes from my perspective once we get the factory orders out of the way, and then we'll see. All right. Hope everyone has a fantastic day and a wonderful weekend. And I will talk to everyone next week. Thank you for tuning in. Bye for now.